In this lesson, we want to go into more depth and take a closer look at the topic of structures. We have already learned what structures are, the structural breaks, what dimensions there are, the topic of order flow, and we have looked at supply and demands. We now want to combine these things properly again and go into the finer details. Our goal is to recognize what is happening in the chart as best as possible, and accordingly, we have to think about what are strong and weak highs and lows, and how can I recognize and avoid them so that we can stay away from weak areas. And the best way to do this is to go to TradingView. I have the example from the DAX again here, which we will now take a closer look at. We will only take a look at this section of the chart right now. What are strong and weak highs and lows? The strength of a zone is defined by the strength of the structural break. Here we see a break of structure to the downside, and we potentially have an area of supply from up here, from which we could potentially trade. And if we make these considerations now, we can think about which area is strong and which is weak. And this consideration is extremely important and extremely dynamic, and it's easy to lose the overview of the overall market while doing so. But it can be incredibly valuable. So let's take a look at this example to see how we can evaluate it. To trade from a strong area, we need a break of structure, which means that the zone up here really has power and is moving the market away. So basically, this zone moved us into a new low, breaking the overall structure. So we are in a bearish market right here. This also means that if there is no break of structure from a zone, that the zone therefore is a weak zone. All of this means that this supply up here would potentially be a strong zone that we could look at for the future. We know now that we want to look for shorts because this side seems to be strong because of the break of structure. Let's take a look what's happening down here though. We see we are building a demand zone right here, but what's happening down here now? Because we see that it looks like the demand zone is not being broken down here, which means that the demand side is probably taking control here. And this high here is potentially weak because it didn't lead to a new low. So there was no structural break from this high, meaning this is a high that is weak and potentially is only there to be swept as liquidity. Let's see what the market does. We see that we take this liquidity up here, and here we could have entered also in a short trade, marking our stop loss above this high and targeting this demand zone down here. Let's take a look at what the market does. We see the market was close to our stop loss, but it doesn't break this supply zone right here. If we would have moved above this level up here, we would have seen a break of structure, and this low would not be a weak low, but it will be a strong low because it pushed us into a new high. If we keep playing though, we see that the market eventually moves down and we dive into the demand zone again. We see the market comes up again and eventually we hit our demand zone again, because this zone was weak because it didn't move us into a new high. This way, we basically look at the market, determine supply and demand zones, and then we just look at which point has led to a break of structure. This point led us to a break of structure. This is a strong zone, therefore. We moved down into a new demand zone. This demand zone didn't lead to a new high, so there was no break of structure above this level here, meaning this is a weak demand zone. And eventually we will move into the demand zone again. Of course, in this example, we didn't instantly move into the zone because the market still needs liquidity to move. The market made this liquidity in the form of a range. So generally speaking, we can see now, if a zone moves us to a break of structure, it's a strong zone. So a strong high or a strong low. If it doesn't lead to a break of structure, it's a weak zone or a weak low or high, and will therefore in the future be liquidity for the big players. See you in the next video.